This conference will now be recorded.
Hi, I'm Patrick Reed. Apologies, I've just come off. I'm back on now. Hi, Patrick Reed from the Adamus Principle. And Adam is a no-show again. He sends his apologies. He's just holed up with some very important people in Australia. Can't really say much more than that. But hopefully, when they let him out of the on the leash, he'll come back with some information. Some the state of play in Australia, and we've got an Australia special. I used to tour in Australia when I was a DJ many years ago, about 20 years ago, and I've changed since then. But in some ways, Australia has not changed because it hasn't had a recession for a good 20 odd years. Is now the time? Are we going to change? We talk about housing. We've got some data. China is key. I mean, China's appetite that took Australia through 2008 was iron ore and the commodities, So we've got a very special person that you've seen him before. You're going to see him again. His name's Pete. Hello, mate.
Hi, Patrick. How are you?
Very well. We were just talking offline about, the whole China thing, and I think, we've got some data in Australia, and we'll go through bits and bobs on that. But I think the key thing that is going to move all of the Aussie crosses is China, isn't it?
Yeah, absolutely.
Yeah. So we were just talking about, Trump tweeted over the weekend. Sorry, I always do this. I'm chewing mints when I shouldn't be. Sorry about this. Trump's latest tweets over the weekend really, saber rattling in the economic sense. And we were just thinking, last week, last weekend we gapped lower. G10 yen, G10 risk fell off, bled through, and then it was really EM that really shook me on Friday, and we spoke about this offline. And EM is not really hasn't been dancing to the G10 tune in risk terms. As you know, yen crosses got hit. They gap lower, it got hit throughout the week, and then we had a big old bounce in EM. Dollar got hit. It was risk on Friday. So when I see something like that, I'm always thinking, okay, we're going to get a risking bounce. Is G10 going to follow EM? Because it wasn't just Turkish lira, which we all know is on a kind of lone wolf on their own rules. Rand and MEX and broad risk in EM was rallying on Friday, and stocks as well. They're brutal bounces there, yeah, close to the break levels. And I just think it's at the least not a surefire limit sell risk, is it, Pete? What do you reckon?
Yeah, to be honest, I agree. I mean, the watchers from our show know that we both pretty bearish risk in general, and here we are after a sort of failed trade talks. We should be really limit short and bearish risk, and somehow we are not. I'm same as you. I've been monitoring the price action. Obviously, I sort of was on board here and there, but not in any sort of form that I would normally be, because I just don't trust what I see. The EM move is, even when dollar EM rallied early in the week, it was never, it never was in a hurry. It was just a normal kind of whatever, stuff we have seen in the weeks and months before. So even when it rallied, it wasn't in a hurry. And then the turn, as you pointed out on Friday, yeah, it's a mix of both, not so risk off and benign US CPI. But the CPI should be second fiddle if the market would be really, going on a full blown out risk off mood, which it kind of seems not to be. Now, actually, I just now read as well on CNBC that Kudlow says Trump and Xi are going to meet on the G20 despite the trade dispute. So they're going to meet up. it almost seems like that the market tries to double guess Trump. It's almost as if people do not take Trump as serious anymore, because we know his tactic now: bully, see what he can do. In the case of China, he got it completely wrong. Someone should have told him that you can't bully the Chinese. It's not in their culture to lose face, right? So, he should have, instead of tweeted, he should have picked up the phone, called Xi and tell him, if you don't bloody move on, they're going to slap some tariffs on, right? Maybe that would have created a lot more interest. The other thing is, but it's always hard to believe everything. When you read the 3 reasons the Chinese gave why they kind of backed off, they're all reasonable reason, from a neutral point of view. We don't know the details, blah, 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 blah. Obviously, Trump wants the Chinese to buy as much stuff in the US as the trade deficit is between the US and China. And China just says, okay, but things have to be a little bit realistic. Probably they can't buy 50 billion worth of soya beans or whatever is a topic. So the other thing they demanded is that all the tariffs go, which is kind of, if you try to have a truce, and you want to shake hands, then maybe they're not so wrong to expect that the tariffs are kind of brought down. You make, whatever, you open each other's market for each other, blah, 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 blah. So to leave the tariffs, to demand, maybe I have no clue about the details. We all know where the trade deficit is, but can they really buy that amount of stuff out there to just please Trump and make the deficit disappear? Probably not. And then there is a big point, and that is directly to the address of Trump, is about dignity, right? Where they said, basically, if you deal together, look one another in the eye, shake hands, and that's it. No, we're the winner, or all this kind of bullshit. China doesn't do this. So, but coming back to the market, it seems almost if the market, even though when they say Mnuchin says, oh, there's no further meetings planned, it's almost like market is not willing to go like, oh, no meeting planned, trade talks collapsed, everything yours. Market seems to sense that the US is not walking away from this either, right? Yeah, there might be whatever is going on, but it almost feels to me as if the market realizes and knows that Trump might need a deal a lot more than the Chinese do. The Chinese, let's not forget, right? Yeah, they have their problems, but they can muddle on their problems another few years. Who cares? They think in 5-year terms. If they don't do a deal this year, they do one next year or the year after, or not at all. I don't think the Chinese are as bothered as the US or Trump wants us to believe. And so I think maybe the market has become a little bit smarter to realize that, wait a minute, Trump may make a U-turn here at some point. How he's going to do that, how he's going to sell it to us, what kind of spin he's going to be using, I don't know. But it's almost as if the market has not given up that there is a chance for a deal over the next, God knows how many weeks. And so I'm in 2 minds. I'm obviously a risk bear. I'm short risk. I'm only small short risk. I haven't added because I don't trust it. As you said, if I see dollar emerging markets start to explode, I'll be limit short risk very quickly. But as long as I see EM trending okay, I refuse to sell low ones in dollar yen. I refuse to sell low ones in euro yen. 109.50, we talked about it. We're blogging about it during the week, the invisible hand. We tested it really many times. We didn't break. Someone told me, apparently, I'm going to check that in a minute, it's a lower end of the weekly cloud. But, I know the handwriting of the invisible hand. And, even if it's a cloud level, it could quickly go down to 20 or 30, right? The cloud is not working on the pip, but the invisible hand is working on the pip. So as long as I see 109.50 hold, true or false, right or wrong, I assume it's invisible hand. I'm not going to fight them. I'm not saying they want to turn it around. I'm just saying it's going to be controlled. And like we spoke about it offline, we have a lot of control going on. We have the Chinese state funds buying Chinese stocks on Friday to stabilize stocks. Who knows who bought these US stocks? But it's the US protection team that was active. Or if it was these late tweets that suddenly looked like, Liu was saying cautiously optimistic, maybe the market just didn't want a weekend surprise and just go like, you know what, let's cover our shorts for the weekend. We can still on Monday, right? So what it is, I don't know. I don't trust it. Something is not adding up. And as I said, as long as dollar emerging market is not screaming higher, I will not sell low until the yen crosses. Definitely not. I'm not as brave as you are. I'm not going to be long Aussie yen. I keep a small short. But as we said offline, can it bounce if the sell-off doesn't happen? Yes. If Monday is not a sell-off day, and the Dow is down to 300-400 points on Monday, then it's probably everything is going to bounce without a shadow of a doubt. I would agree.
Okay, you just got to get through Monday.
Yeah, Monday's definitely the key, because people, I read a lot over the weekend, and there's some people who just think like already on the open tonight it's going to be mayhem, which I disagree. But I'm as I said, my conviction is a lot lower than it usually is, because I just can't figure it out, and the noises I get from everywhere just don't add up, and so I'm just stepping back and be a little bit a spectator for a while.
Yeah. No, I completely agree. So the other thing, we did actually mention this offline, and we'll come to the Australian data a bit later on in the show, but the key thing that will move risk lower is a proper retaliation from China in the tariffs, and then I see risk lower, but only in G10, and that's fair enough. That's pretty obvious. It's fair enough. I just see, looking at both camps, Trump and the Chinese camp, I just see that both of them want to save face. Trump wants to save face as the deal maker, because he's going to be firing that election gun soon. I mean, the election process in the States, as you know, is a juggernaut, and they spend several tens and tens of millions of dollars on it. So, he's the deal maker. He wants high stocks. He wants a roaring growth. He wants all this stuff. A lower dollar, and all this kind of. If they can kick, and do it in a cute way, I think it's an easy win for both. And I just think they can do it in such a way as nobody's going to look under the bonnet, or what they do look when they see under the bonnet will be some kind of very woolly agreements for later on to be decided, that kind of thing. So all of this, maybe the market's kind of seeing that. That's why risk hasn't got another leg lower. But I certainly think that all, I mean, everyone's thinking about what the Chinese are going to do. And if they do retaliate, risk will be lower. There's no doubt about it.
I think I would love to add, what the one thing we talked about offline, throughout the last few months, we always waited for the buy rumor, sell the fact once a trade deal is done. And we always argued that China is where China is, not because of the trade war. China is where it is because of the real, economic problems, nothing to do with the trade war. Trade war or tariffs may have had a little bit of pain, but in the bigger picture, the slowdown in China has nothing to do with the trade war. Now, if I argued like this before, then I almost have to take the same argument. And that is what went through my head on Friday, and probably a reason why I haven't, or another reason why I haven't sold risk, is if that was my argument, buy the rumor, sell the fact, because actually a trade deal doesn't matter. Now, I can't sell a risk like an idiot on the failure of the trade talks if I have said before that the trade deal in itself will not decide whether or not China is going to, recover or not recover, right? And so maybe whether that's another thing the market realizes, that actually, wait a minute, there's some green shoots in China, whether true or wrong, or whether they are going to be there to stay, that suddenly this whole thing becomes a bit of a damn squat, you know? But I don't know. I'm confused. I'm confused. And you know what? I learned all my career to listen to the gut. If for me things not adding up, I don't take risk, or I don't add to risk. And I religiously stick to that. For me, high conviction means big trades, limit short or limit long. Low conviction means low risk to no risk, and definitely not add risk. And I think that's where I am. I'm a macro risk bear because of the global slowdown that I still think will be here to stay. But I'm not willing to jump the gun for something that I'm not totally convinced that it's actually the start of something big. So I doubt it's the start of something big. But you know, I'm a trader. So if we smoke the Dow on Monday, I mean, in a big way, and we're not talking 200 points, we're talking 500 plus, I will not hesitate to sell. But I will not preempt. So this time I don't preempt. I preempt in a way that I'm being small short risk all year, selling into the rallies. Those positions I keep, so I have a toe in the water, so to speak, if it suddenly starts to go, which makes it easier to add if you have some good ones short. But I'm not. I just wait. I just watch. That's really the strategy for me for Monday.
That's really good. I mean, we spoke a bit about the correlation with the M pairs and US stocks, in that you know, when things go south, that's probably a better beta than if things go north. Certainly with euro, because that's got a mind of its own. And I just feel, you know, if you look at the Dow action last week, and there's some, you know, it just reversed. I mean, you know, some pretty brutal reversals there. So I think we're close to the break points on both the Dow and the S&P. So that'll be interesting to see how that plays out. I know that certainly you've taught me this, is I look at stocks as a nice thing to have, and I do really, I look at yen crosses as a pure risk, and certainly even more so EM crosses. But having stocks as part of the stars aligning is a really nice thing. But at the moment, I just, because of the distortions in the stocks, US stocks getting goosed, I feel, you know, that's a red flag for me, on the up sort of thing.
Yeah.
So it's interesting, isn't it? The other thing, I've just, can you see the first slide here with our logo, the Damp's Principle?
Yeah.
I just want to, we'll go through some Australian data, because obviously Australia, you know, Aussie crosses will be really big because of the China thing, but also it's got some good data coming out as well. So I just want to take you through some bits. I will have to say, all of these charts I'm going to show you are from Greg Gibbs, they're Amplifying Global Effects. I'm very fortunate I get his stuff. It's really, really good. Just so, a little plug for you, Greg. I know hopefully you'll be watching, but and thanks for letting me show you charts. So I'm just going to take you through the first one. So this is interesting. You know, you can just as a kind of, I mean, you probably know all this already, but Chinese equities retreat more than US equities. So they're suffering more, you know, and that's interesting, isn't it? So they're taking the hit here. You can see you know, iShares, MSCI, China ETFs, Shanghai Shenzhen, Australian dollar spot, you know, and the USA S&P. You can see how China's shares have taken a bigger hit here. Well, any thoughts on you, Pete?
No, to be honest, I mean, that, like we discussed many times, the US stocks has been a conundrum for many months, ignoring all the sort of, negative signs on the global economy. On the China one, what we don't see on this chart as well is, even though it's the sort of same rally from early 2019, the size of the rally from China has been tremendous. So that we're going to have a bit of a pushback before, and I think we held this 76.4 FIBO level on the top side, and suddenly that split the market a bit, and we started to actually come off before we had the negative news on the trade side. So there was obviously always the problem with Chinese stocks is you have like this big speculative, people just punt it as badly as in the US, probably even worse. And maybe the move earlier in 2019 was just being overexcited, shall we say. But you know what? It's probably still more at the heart of, let's say, the trade. The trade dispute will probably make people more nervous because, end of the day, Chinese market is still an emerging market, even though they might not like to hear that. Technically, it still is. So you will always still see a bigger reaction, even in China, even if it's maybe not an emerging market like South Africa or Turkey or whatever, but it still is in the sense of foreign investors. So foreign investors been dumping stocks last week like crazy. That's from what I was reading. So that means if they're long S&P and long China stock, they only dump the China stock. Now you can argue maybe that little green line has to come off rather rapidly. That'd be a different point of view to say that actually the S&P is too high, which probably it is in a way. But so it was a lot of foreign selling in last week in the Chinese stocks, really out of worries of what may happen. So we could as well say, you know what, if nothing happens, and I think you made an interesting point, the Chinese haven't officially retaliated yet because there was still this door that wasn't closed for a deal. I would say as long as China doesn't retaliate, there might be stuff going on in the background that we don't know about. The moment you see the retaliation, just hit the beats in everything. Stocks, risk, just press the button, because you made a very interesting point. The moment you see the retaliation, that is, the door is closed. That means the Chinese have given up hope for a deal. And I think the Chinese are the ones right now to keep this alive by not retaliating, because they see maybe there were signals away from Trump, from the actual delegation, that says, you know what, guys, maybe you're not that far, apart from each other, blah, blah, blah. And so I hope if they retaliate, it's going to be our time zone. I hope it's not like 2 a.m. because I might actually miss it, because I sleep these days, not like in the old days. I'm too old to be awake at 2 a.m. these days.
Sleep or sleep?
That's going to be the key. I would actually almost say that is the absolute key for risk on, risk off in the next 1 or 2 weeks, whether or not the Chinese retaliate.
Yeah, agreed. So the next slide we've got Dr. Copper, our old favourite. Not looking so picture of health here. So obviously, trade tensions having a big effect on this. Interestingly, Aussie, it's come off a little bit, but I don't think, the thing that interests me is you've got the materials index just spiking up here, and then the Aussie, it didn't really support the Aussie. And then here, obviously, copper itself, copper futures, just especially just in sort of Q1, still not really doing much. And then obviously when it's coming off, so just an interesting chart really, but not great. Copper down, weighing on sentiment in Australia. So and this is all, it all kind of makes sense for the sentiment with China. Okay, so the next one we've got. So these are 2-year swap rates, just to compare with New Zealand and Australia. This is quite an interesting chart. Interesting how, we all thought, and certainly Greg Gibbs tweeted about it, about, everyone was thinking RBA is going to cut, RBA is going to cut. They didn't. New Zealand did. New Zealand did. So they, RBA had this cautious statement, and they just want to see a bit more data, and still some cuts being priced in. But the 2-year swap curve spiked on that no cut decision, and obviously the RBNZ, it went much lower on the cut. So Australia behind the curve, New Zealand in front potentially. But it just a nice little sort of swap curve. The 2 years, always nice to have in your chart deck. I don't really see. I don't know why. It was a bit odd for me. I was expecting a cut, and maybe they know the data this week. I don't know, but more of a wait and see. Like Draghi sometimes does. But I was shocked about them, not cutting. And Aussie spot didn't really do much. It was yours to sell on that dead cat bounce. What are your thoughts on that, B?
Yeah, to be honest, it's funny that in the beginning the market did argue we're going to get the first cut in summer, and then suddenly we decided it has to be now after CPI. I wasn't so sure about the cut because I just felt that we know employment is always like a strong number in Australia right now. That's the sort of disconnect from some of the other data. And we had sort of general better Chinese data. We had some small better data in Europe. We have still data in the US that sort of hangs in. And it almost feels like the RBA wasn't yet ready and just buying some more time, as you said, a little bit like in ECB kind of way, where they go, you know what, it doesn't make a heck of a difference if you do. The only interesting thing was the comment, the reference to the FX, which the market actually hasn't really picked up on or ignored or felt it wasn't important when I mentioned that we at the lower end of the sort of almost like the projected range of the Aussie. So it tells me that actually Aussie for them seems to be kind of fair value, while in the past they didn't mind Aussie to go lower to help stimulate the economy, because obviously foreign exchange, as we know, is the fastest transmission mechanism when you want to ease, right? Rates are slow, FX is instant. And so it's almost like, and the market just did not pick up on it at all. And for me, when I saw this reference to the FX, I was a bit surprised. And it tells me that I'm not saying Aussie can't go down. What I mean is the RBA has no strong preference at this point for the Aussie to go down. They don't want it to go up. They're just no indifferent. But in the past, when they done policy and they talked dovish about the Aussie because they wanted the Aussie to maybe correct another 2, 3, 4, 5%, while now the statement tells me, yeah, if it goes lower, it goes lower, but it's not our desire or we don't need Aussie lower. That's almost how it felt. So maybe that's why the Aussie, we finally did break 70, and in the last many months we struggled to do so, but it hasn't run very far.
No.
And it's kind of, I don't know, if you don't get Armageddon in risk off, then maybe this is just not a level to sell Aussie.
Yeah.
I can't believe I say this after I've been short for a year, but it's like, that's just how, I can't believe my own words, but I don't think it's a sell here, unless we get like a total disaster and risk. But right now, I wouldn't sell it.
Yeah, I mean, it's here on the chart, but it's it's interesting, isn't it? If we, yeah, I think the thing about it is it feels that all of the risk pairs are kind of they're bumped along the bottom, and then all the risk reward is, you know, if we get any little bit of hope in either it's the Australian data this week, we've got that, or the China thing, or whatever, then you might get a meaningful bounce. So I just feel, you know, especially with the EM on Friday, I just feel that that's why I'm long Aussie yen. So, but you know, one word from, you know, if there's a retaliation in China, then you know that's toast.
Yeah.
But interesting. It's going to be a really big week. I think, you know, the data in Australia is going to be interesting just because of the Trump Xi thing, and also I feel, yeah, I didn't think about that, if about the Australian the RBA wanting to move spot, and yeah, it's a really interesting point you made, you know, because the data could probably just carry on. I mean, the CPI was a shocker, obviously, but if we get fair data, then and the RBA is happy at this rate, then there's nothing they should do, really. I mean,
Yeah. No,
um,
rates, we should not forget rates are overall very low. And I think this is why the
yeah,
ECB is refusing to blink. And the only thing they've done is just push the first hike out rather than thinking about. I think it was Hansen on Friday making comments about the ECB is in no hurry to rethink the ECB policy, right? So that means they're going to be, you know, if people expect any dovish things from Europe, I think you have to wait for quite some time. So they
yeah,
just indicate. And you know what? Let's be honest. You cut what, 0.1, 0.2? It's not going to make a heck of a difference anyway.
try
Rather
and
than
trade that. Good luck.
you create like another can of worms where the market suddenly goes like too negative and it becomes self-fulfilling. So maybe the good old Powell patient is maybe the winner here.
Yeah, yeah. Well, I feel that you know, I feel I'm 60-40 bullish dollar. Just, and I'll
Yeah,
show you the index. I just feel that it's, you know, we broke 97.70. We failed up there. If we stay below it, if we top out there and then go below 97.50, then I think we'll be testing, you know, 97s and just slightly below that, and that would be a failure in my eyes. And you know, for me, that's largely dollar yen. I mean, euro dollar's not really doing much, is it? It's just
uh,
not really doing much at all. Dollar yen's come off.
you know, the problem is always, and I think I was talking about it last week, that the dollar story just has moved to second place.
Yeah.
And the focus has obviously, you know, trade and what happens to risk is on the number one spot. And euro dollar, we spoke about it offline as well. And I'm a big believer of that. Euro dollar has no bias in risk, which means you shouldn't even, you know, it's going to be random. If yen cross gets smashed and dollar yen is not allowed to break 109.50, euro dollar will go down to 111.50 for euro yen. If dollar yen breaks 109.50 and goes down to 109, 108 and a half, euro dollar is going to be 113. That's pretty simple. And that means you actually trade euro dollar, but you need a view on euro yen or dollar yen. So you can as well just trade euro yen or dollar yen. It's no euro dollar is hijacked right now, and people sometimes moan about, and I remind people, you know, dollar mark was the same in the old days. There was just a time when dollar mark was pushed, and you know, you had the dollar story, you had the mark cross story. Now you have the euro cross story versus the dollar story. It hasn't changed. It's the same story all over again, that euro dollar has no bias. If the market is overly short, it's going to bounce because the market wants to reduce risk. If the market is long, it's going to come off because the market wants to reduce risk. But there is no risk on, risk off buys for euro dollar, and it's going to take its clue from euro yen / dollar yen, and it's just no, The only thing I would say is I wouldn't mind a rally in euro yen to sell it because I'm still bearish for the EU elections. I want to be short either euro yen or euro Swiss or both, but I will not play through euro dollar, even though euro dollar might.
Yes, in the old days, I used to like CNH as a correlation with euro dollar, but even that is not really doing it.
The problem you have is what you have to be flexible is in a normal world without this trade talk stuff, it's a very good dollar correlation. From the moment of the Trump tweet last Sunday, that has just dollar CNH has nothing to do with the dollar, right?
Yeah.
So you then now, as long as we play this Trump tweets and China comment thingy towards risk, it's still gonna stay that way. And then maybe in a week or two, I think we can take it over as a dollar correlation again. So when things happen like what happened last Sunday, I immediately stopped watching dollar CNH versus euro dollar. You then treat it as either as an emerging market or as a risk off. So the jump in dollar CNH we've seen was the risk off move rather than a dollar move.
Yeah, sure.
So it's kind of has these two correlations, and you just have to pick the right one at any given time.
Yeah, that's what makes it fun.
Yeah.
That's great. Well, what a show we had. Absolutely fantastic. And, let's see what happens tonight. If you're long risk, like the very few, I think I'm probably the only person long risk at the moment. But there you go.
You might be the only winner.
I might be the only winner. Well, drinks on me next week. And
the only thing I can tell people, so dollar yen is 75, 109.75, closed at 109.95. Euro yen is euro yen closed at actually here 123.30. So euro yen hasn't moved on the open. The Aussie is at 69.90 where it was at the close, more or less, I think. Let me double check. Yeah, so there was no, so dollar yen is a fraction lower. That's, I think, pretty much, yeah, Aussie is 10 pips lower. So we haven't moved in the first sort of hour of trading.
Okay, well, let's see what happens. Before we go, I hope you enjoyed the Australian special. Before we go, Pete, you're going to tell us, you do this amazing commentary. You've got, I won't say any more. I'll let the big man, I'll let you do it justice.
Thanks very much, Patrick. Yeah, I do these sort of 4-hourly and daily charts. The 4-hourly charts really for the day traders or sort of multi-day traders. The daily charts for the macro guys. I add my sort of thinking, the reasons why I think it's going to be moving up or down on each single currency pair. So if you have my research, you're going to have a comment to every dollar cross, every actually, euro cross or cross out there, as well as emerging markets. And then I'll write a piece called My 2 Cents, where I just give the sort of channel spin. Not writing that every day because it should be fresh. It should be really reflecting my thoughts. And all now and then I'm a step or two ahead of the market, not always, but sometimes. And if someone is just interested, wants to have a look at the product, just, ping me or ping Patrick and we can have a chat about it. Thanks very much, Patrick.
Thanks very much, Pete. Great to have you on the show. And, see you. We'll be both blogging all week. And just fire if you've got any questions about the subjects we spoke about today. If you disagree, great. We want to hear from you. If you agree, that's great too. Just feel free to comment and watch that risk. Thanks very much, Pete. See you next week.
Thanks very much, Patrick. Have a lovely week.
Cheers, mate.